Hello everyone, my name is Peter and let's look today at the main equity indices and how the situation looks in the chart. Let's start with the DAX futures, so basically we'll talk about the German stock index. But before we look at the technical analysis, let's talk about what is a divergence when using technical analysis and some other indicators or oscillators. The divergence usually happens when the price of an asset is moving in the opposite direction of a technical indicator, such as an oscillator. The divergence warns or keeps telling us that the current price trend may be weakening, and in some cases, or basically in most of the cases, it could lead to the price changing direction. So in our scenario, you can see that the DAX has been rising steadily over the previous weeks, posting higher highs and higher highs. However, the RSI indicator, which we are using below the price chart, has failed to rise to new highs. Therefore, it informs us that the bullish momentum could be waning, could be weakening, which might in the near future lead to the price changing direction. In our scenario, to the bearish direction. Secondly, this is a well-known rising wedge formation, which is usually a bearish reversal pattern. So once again, this keeps telling us that we might see a price reversal very soon. In this scenario, if this happens, we need to see a break below this upward trend line, which is near 15400 for the DAX index or for the futures on the DAX index. And if this happens, if the price comes down below this trend line, then we expect the price or the DAX index to decelerate lower, most likely toward this support zone near the 15,000 euros for the DAX index, because you can see that the previous lows have been posted here. So this could be the first stop if we really see a bearish reversal here. So our basic outlook for the next day is bearish for this index, and we expect this pattern, this rising wedge formation to become valid. And also we see this negative or bearish divergence between the price of the index and the RSI indicator. Therefore, we expect the price to continue lower over the next days. Let's look also on the British FTSE index. The situation is really similar here because the price has been in a very steep uptrend without any major corrections besides this one in the end of the December, and the index has also jumped to new record highs, which is really interesting considering the macroeconomic situation in the United Kingdom. But let's focus back on the technical analysis here. As you can see, we also have a bearish divergence here between the price and the RSI indicator because the price has risen to the new highs recently. However, the RSI indicator has failed to do so. So this once again implies that we could see a decline in the price over the next days, although the situation is not so extreme here, I would say, because we still have some space toward this uptrend line from the October lows. So in our mind, or in my mind, we could say that the FTSE index could continue lower from these levels. However, the bearish scenario is not so solid as with the DAX index. Nevertheless, we still expect a decline toward this support zone of previous highs, which is in the 76.50 pounds area. So this is our target in this bearish scenario for the next couple of days. Let's also talk about the US indices, starting with the NASDAQ technology index. As we can see, the rally has also came to the tech stocks as tech giants such as Google, Facebook, and Apple have been laying off people, which is usually bullish for the stock price because the company will have lower costs. Therefore, it could translate into higher profits. However, it's always not that simple. We are seeing a small flag pattern in this upward move. A flag pattern is usually a continuation pattern, so it looks like, or it should tell us, or it should imply that the price will retest this lower trend line and then head again toward this higher trend line. This is a basic definition of this pattern, and if this is really, or if this really happens today, it looks like it should happen today, then we can expect a return toward like $12,600 for the NASDAQ futures. However, if bearish pressure continues to be strong today, it's Friday, and we are seeing some large expiration of options, so it might bring elevated volatility. And in this scenario, if bulls fail to defend this lower line of this flag pattern, we might see a decline targeting previous highs in this zone around 12,000, maybe 100 above it. Moreover, there is another key support here in the 12,000 area, which is the 200 daily moving average. It's this thick blue line. From the medium term perspective, as long as we are trading above these two supports, the medium term outlook seems bullish to us, so we would prefer buying dips in this area. However, if the situation deteriorates notably and the index closes or drops below these two supports, then we might expect further decline targeting this horizontal red line. So for today's trading, it could really be like a strong upward move or strong decline, because the technical situation for the short term is really like do or die, because if the price declines below the support, stop losses should be hit and the price might decline further. On the other hand, this is usually a continuation pattern, and in this scenario, in this case, it's a continuation of this small bull market which started in January. And let's move on to the last index we have here. It's the S&P 500 index, especially the E-mini futures with the ticker ES. The situation here is a little bit more unclear, because the index has jumped toward this key resistance of previous highs in the 4200 zone. However, bulls have failed to push the price above it, and we've seen some profit taking recently, which has brought the price down from this resistance. On the other hand, we are still too far from this upward trend line, and also too far above this 200-day moving average. So basically we are in the middle of this consolidation zone. Therefore, it's really hard to try to guess or try to find some good technical support or technical analysis which way the index will really go. So in my point of view, we should either wait for a further decline and be buyers in this zone on the uptrend line combined with the support of this moving average, or on the other hand, we could wait for another rally to this resistance and then see how the situation develops there, whether we would want to be selling there or whether we want to be waiting for a break above, which would most likely confirm the uptrend. So with the S&P 500 index, as said, the situation is unclear, and today's US session could bring more clarity onto what will happen during the next week. So this was everything from me. It was a brief technical analysis of the four major indices. In conclusion, the outlook looks bearish to me, and we might expect further declines over the next days. However, today's US session could bring like real high volatility because of the mentioned option expiries. So we will see what happens today, and on that foundation we can start building an outlook for the next week. So thanks for watching, and if you like more content like this, don't forget to subscribe to our YouTube channel or follow us on all other social networks. Thank you and have a nice and successful trading day.